Okay, good morning again, and we will get started. And I see we have over 20 persons on, so we can get started. All right, Chairman of the ECSRC and Commissioners, Directors of Finance, Financial Secretaries, Permanent Secretaries, staff of the Ministries of Finance and other government ministries in the ECCU member governments, heads of our partner regional organizations in the ECCU, consultants, members of the public, ECSRC staff, good morning. On the 19th of October 2001, a formal regional securities market for the ECCU was launched. The market is governed by common securities legislation, which is passed in each of the 8 member countries of the sub-region. That date also marked the birth of the ECSRC, the Eastern Caribbean Securities Regulatory Commission, a regional regulatory body charged with ensuring compliance with the securities legislation so as to protect investors in securities. The launch of the market was the achievement of another important milestone in the sub-region's capital market project. The Eastern Caribbean Securities Market, ECSM, is expected to contribute to the economic development of the sub-region as it has the capacity to provide the users of capital with an alternate lower-cost source of funding and the owners of capital with more opportunities to manage wealth. Permit me to borrow a few lines from our chairman, His Excellency Arthur Thomas, in his speech at the ceremony to mark the 20th anniversary of the establishment of the ECSM on the 19th of October 2021. And in his speech, he was quoting from the late governor of the ECCB, Sir Cade Whitevenor, who 20 years earlier at the start of the ECSM stated, "The establishment of the Eastern Caribbean Securities Exchange will go down in our history as one of those fundamental shifts in social and economic arrangements that are defined in terms of the before and the after. This institution will have an impact on our laws, on our enterprises, on how these enterprises will be financed, and who will own our enterprises. It will have an impact on the distribution of incomes and on the relationship between workers and employers. It will have an impact on and will be impacted upon by air transportation and telecommunications industries." What is clear from this statement is that the advent of the ECSM was meant to usher in a new economic era, ripe with opportunities and possibilities for the countries and the people of the ECCU region. The hope was that the ECSC and the ECSM would serve as an opening to greater participation and inclusiveness in our economic systems, both within each member country and across the currency union. As more persons become involved in owning shares and other types of securities, they would feel that they have a greater stake in our economies and societies. Companies too are now afforded another avenue for raising capital to expand their operations. Consistent with this vision and in recognition of the challenges faced by micro, small, and medium-sized enterprises, MSMEs, in accessing finance, and the positive impact that these entities can have in promoting the economic development of our countries and the region, the ECSRC, as part of its market development mandate, is seeking now to create an environment that would offer MSMEs the option of raising capital on the ECSM as an alternative to traditional financing. Therefore, with funding from the Caribbean Development Bank through its Caribbean Technological Consultancy Services, CTCS, the ECSRC is working on a project to implement a regulatory framework to promote crowdfunding in the ECSM. The main objectives of this project are to enhance the regulatory framework for non-traditional sources of finance for ECCU member countries and increase access to finance for MSMEs by facilitating the development of an equity crowdfunding platform in the ECCU. In summary, the project consists of 3 components. The first is the validation of draft crowdfunding rules developed by the ECSRC, and the stakeholder session this morning is part of that process. The second is the sensitization of crowdfunding stakeholders. And this would involve a series of sensitization and training sessions held to educate entrepreneurs, investors, investment advisors, and other key groups about equity crowdfunding and equity investment. The goal is to build interest in and demand for equity funding and support for crowdfunding in the ECCU member countries. And the third aspect is the testing of a crowdfunding platform, one or maybe two, through the ECSRC regulatory sandbox. The ECSRC will provide authorization for at least 2 crowdfunding platform prototypes to be tested within a controlled regulatory and supervisory environment. The project's key performance indicators include awareness raising for at least 300 stakeholders, at least 150 entrepreneurs trained in crowdfunding and equity investing, of which at least 30% are women, at least 75 prospective investors trained in crowdfunding and equity investment, 5 investment advisors trained in crowdfunding, and at least 2 MSMEs participating in the regulatory sandbox. Fundamentally, from the ECSRC's perspective, the success of this project would be demonstrated in an increase in financial literacy and knowledge of the operations of the capital markets among the general populace in the ECCU member countries. And we're hoping that this would spur interest and participation in the ECSM, not just by the individual investors from the region and the diaspora, but by MSMEs that have developed to a stage where they are now ready to list their shares on the ECSM. At this time, allow me to take this opportunity to thank the CDB CTCS for its ongoing support, and to our 3 consultants, Dr. Winsome Leslie of Dev Solutions Consulting, Mr. Thomas Ward and Matthew Render of Mosaic, a digital marketing agency operating in St. Lucia, who have demonstrated unwavering commitment in working with us on this project when we started about 3 to 4 months ago. To Matt, who has been working hard behind the scenes to assist with the marketing and awareness raising of the commission as well as the project. Matt has developed a mini website for the project, which you would have visited and registered your interest, and other aspects to facilitate the hosting of this event today. Dr. Winsome Leslie is assisting with awareness raising and training, and Mr. Thomas Ward is the technical advisor on the project. Mr. Thomas Ward and Dr. Leslie will be our presenters today, and they will also be taking your questions. Dr. Leslie, by way of introduction, is an international development specialist and a certified business advisor with over 2 decades of experience in MSME development. She is currently the president and CEO of Dev Solutions Consulting. This firm provides advisory, training, and project development services in entrepreneurship and MSME development to business intermediaries in the US and frontier markets, with a focus on access to finance. Tom Ward is the technical consultant on the project. He has spent over 12 years at the UK's Financial Conduct Authority, leading on the implementation of many policy initiatives, including the UK's implementation of MiFID II and evaluating the UK's approach to crowdfunding. Most recently, he established and led the FCA's Regulatory Sandbox initiative, seeking to encourage responsible innovation in financial services. Tom has also worked for the University of Cambridge's Centre for Alternative Finance, working with and advising policymakers and regulators around the world on regulatory approaches to new and emerging business models and technologies, as well as initiatives promoting financial innovation. It is my pleasure to welcome you to the first in our series of stakeholder consultations on the draft ECSRC rules for crowdfunding, and we look forward to your full participation. Thank you very much. And I will now turn over to Dr. Leslie.
Thank you so much, Alusha. And I'm very pleased to be here. I'm excited to see so many folks online to be involved in these stakeholder consultations. In order to set the framework for the discussions that will happen later, I'd like to start by talking a little bit about what is crowdfunding. So I'm going to share my screen. Is everyone seeing that?
Yes, we can.
Okay. Let me begin. So what is crowdfunding? Crowdfunding is really raising money from the public for a project or a business via a regulated financial intermediary, in our case, an online platform. There are different kinds of crowdfunding, and I wanted to just talk a little bit about those. First, there is crowdfunding via donations, and this is usually used by NGOs with a social mission. Here, the public is providing funding to a project or an institution without any reward or any return on that funding. Then we also have reward crowdfunding, and many of you might have heard about Kickstarter, and this is a forum for that, where, say, a company wants to launch a new product or service. They will offer, in exchange for funding that new initiative, they'll offer a reward of some kind, maybe a free service or first dibs at the product. Next, we have a third kind of crowdfunding, which is called peer-to-peer lending. It's based on debt. And this is attractive for individuals or companies that perhaps don't qualify for a conventional business loan from a commercial bank, or maybe perhaps they're not interested in such a loan. And the attractiveness of this type of crowdfunding is that the interest rates are much lower than conventional financial institutions. And then finally, we come to the subject of this project, which is equity crowdfunding, in which the public is offering funding to a firm or a company in exchange for ownership, stocks or shares in that company. And I'd like to add that this is perhaps the most riskiest form of crowdfunding, in a sense that you are providing funding for a company with perhaps a risk that you might not get any return, or you might even lose your money. I just wanted to highlight here the crowdfunding process. Here you see the public is pledging funds through a crowdfunding platform, and those funds are being provided to companies on the other side. The companies themselves have to post what's known as a campaign on the crowdfunding platform. That campaign means that you're creating a compelling story about your company. You're providing a video, you're providing financials, perhaps financial projections about how you expect to grow that company using the working capital funding that the public is providing. And in exchange for the funding that's being provided to the companies, the public is either getting a reward or loan repayments or shares. Let me turn now to specifically this project that we are focusing on today. I wanted to highlight the key players in the so-called equity crowdfunding ecosystem. And each of these players are important in the way the system works and ultimately in the success of any kind of crowdfunding initiative. And I wanted to just highlight each stakeholder in turn. First, there's a regulator. In this case, we're talking about the ECSRC, which basically sets the policy framework and the rules for how not only the platforms will operate, but also the rules governing how entrepreneurs and investors will play their part in the system. Then we have, moving to the right, we have entrepreneurs, and of course, they will be the firms that are putting these campaigns up on the platform. And of course, they will need to have the assistance of accountants and lawyers to help them to prepare their campaigns. Then you have the investors who are risking their funds to place bets on these companies. And of course, they'll be concerned about various issues such as risk and so forth. And then you have the investment advisors and brokers who would be working with investors to guide them in terms of how to invest in a prudent way via the platform. And then you have the crowding platforms themselves that will be formulating rules around how the investors and the entrepreneurs engage on those platforms. Now, let me just turn a little bit to advantages and disadvantages of equity crowdfunding. Well, obviously, I should say it's a faster way to raise investment capital. It is a much simpler process than conventional equity funding or equity financing, in which a company would have to raise what you call an initial public offering, an IPO, to be listed on the stock exchange, and raising money from the public that way. They would have to prepare a prospectus, et cetera, et cetera. From the point of view of the companies, it gives exposure to a larger number of investors than conventional equity financing, where you're dealing with a few angel investors, or perhaps, if you're large enough, a venture capital company. So it gives you a larger pool of potential funders for your project or your company. It increases your visibility again, because it's on a platform which is open in theory to the wider world. And then certainly in terms of reward crowdfunding specifically, here I'm thinking, you can use crowdfunding to test a product and to create a loyal following around that product. Another advantage would be, and this dovetails again with my last comment, which is startups and folks with new ideas tend to use a crowdfunding method, not only to raise money, but also to test the appetite of the wider public for either that project or service. From the point of view of the investor, it enables non-accredited investors to invest. For conventional equity financing, only accredited investors are allowed to invest legally. So this broadens the scope of possibilities for the general public to play a part in investing. And of course, from the investor standpoint as well, it creates a diversified portfolio. In terms of risk, and of course, like most things in life, there's always a downside. From the point of view of the entrepreneur, there's a need to really build momentum for a successful raising of funds on the platform, meaning you can't just create a campaign and post it and hope for the best. You have to do a little bit of work to mobilize interest even before you are raising money on the platform, so that you have a few early takers, shall we say, coming out the gate to build a broader appetite for your project or your business. Creating a campaign is also time consuming, in the sense that it has to be deliberate. It has to be an effort that's done over a period of time. It means that you have to work with experts in accounting and the law to actually put a campaign together that's consistent with the rules of the platform itself that you're hosting your campaign on. This last point I'm going to make, or rather this third point I'm going to make, is particularly important, because entrepreneurs need to know that if you set a target for, say, $50,000 to be raised on a platform, if that money is not raised in total, then you're not getting any funding at all. So it's very important from the point of view of the entrepreneur or the business owner to set a realistic target for fundraising, so that you're reasonably confident that you can raise that amount. The other thing to note is that depending on the rules of the platform and the fees involved, this could be expensive. So that's also an important point to make. Also, with any investment, as I mentioned earlier, there's a chance that investors could lose their money. So investors need to go into this investment with their eyes wide open, and also with advice from an investment broker who can guide them in terms of how to invest, but also in terms of the true risks of doing so. Also, the other thing to note, and this is different than conventional equity financing or angel investing, is that once you invest, because you are going to have a very small share of that company, you really don't have control over the way the company is run. In conventional equity financing, an angel investor, perhaps when he or she invests, they usually have a say, or they provide guidance at a minimum to that investee company. So they get involved more directly in the way the company is being run. Another risk is that you have to be aware as an investor that when you invest on this platform, even though you're investing a small amount of money, there's a lack of liquidity involved, meaning that you have to be prepared to leave your money leave your money in that company for a period of time, usually years, because you're basically committing to walk with that company as they grow. And so you have to be prepared to let your money sit for a number of years. The last point is also something that a lot of investors might not consider with this kind of investment. And this is a fact that usually, in many cases, equity crowdfunding is used as a first step by companies before they move on to angel investing. So if you're investing with this company and you are putting down a certain amount of money in exchange for shares, if that company subsequently goes to angel investors for a second round of financing, meaning off the platform into a conventional equity financing mode, there's a risk that your shares might be worth less, depending on how that subsequent round of equity financing is structured. I'm going to turn a little bit now specifically just to highlight the aspects of this current project. The general objective, as Alicia might have alluded to earlier, is that the idea is to promote the development of the capital markets in the ECCU by increasing the participation of both investors on the one hand in the market, but also small businesses in the other, by providing this new method of raising funds for MSMEs. This specific objective dovetails, I think, with a broader goal of many of the governments, or I should say all of the governments in the ECCU, which is a commitment to increasing access to finance for small businesses. And here we're opening up possibilities for a new financing instrument, which is equity crowdfunding via this platform or platforms that will be developed. There are three key elements of the project. The first is validation of the policy framework or the rules that have been developed by the ECSRC, which we're going to be talking about later with Tom. Secondly, is the whole sensitization and training for crowdfunding stakeholders. As you can probably imagine, the success or failure of this initiative stands on the stakeholders and their buy-in and their support for the project. So it's very important for everyone to be on the same page with an understanding of what equity crowdfunding is, what the advantages are, what the disadvantages are, what the possibilities are, and how to engage from the point of view of where you sit in the ecosystem for this project. And then finally, the third piece deals with development of the platform itself, where the ECSRC is creating a safe space or a sandbox for interested companies who would like to develop a platform to test that platform, test that minimum viable product, which they will develop using the rules that the ECSRC has devised on how the system will be organized and run. With that, I'm going to turn over to my colleague, Tom, who will get into the rules themselves, and then we'll have a discussion. Thank you so much for your attention.
Thank you very much, Dr. Leslie, for that overview. Pleasure to meet you all. Thanks very much for joining this session. I'm going to give a sort of a quick whistle-stop tour of the rules that the ECSRC and I have developed to put in place a regulatory framework for equity crowdfunding. We did circulate the rules beforehand. Hopefully, some of you will have reviewed them, but I'll hopefully provide some of the an overview of some of the key elements briefly, and then we can have a discussion, and really looking forward to your insight and your feedback. In terms of the overall goal, so we've developed rules that seek to provide a framework for equity crowdfunding to take place, providing what we hope are proportionate requirements and responsibilities for the equity crowdfunding platform and for companies looking to raise capital through them, while also putting in place what we hope are appropriate and proportionate investor protections to ensure that both retail consumers and investment professionals who are looking to invest fully understand the risks and can make appropriate decisions around the opportunities they may want to invest in, recognizing, some of the risks that Dr. Leslie has pointed out. Winston, if you don't mind going to the next slide, please. Thank you. So just briefly, sort of an overview of the key elements. I'll go into a little bit more detail, but overall, the first thing we're looking to do is to introduce a new regulated activity to allow crowdfunding intermediaries to become authorized by the Commission to launch online portals to facilitate equity crowdfunding transactions. So the idea would be that potential investors will register with the portal and open accounts with the crowdfunding intermediary to allow them to view investment opportunities available to them. As you might expect, we propose that authorization for this activity will be dependent on a variety of regulatory standards. So, for example, we'll expect that intermediaries fulfill certain legal requirements, such as compliance with anti-money laundering law, have a certain amount of capital, and have appropriate cybersecurity, business continuity plans, and meet various conduct of business standards. We propose that equity crowdfunding transactions will provide an exemption from the normal securities laws that govern the issuance of listed securities and will be considered private placements. We recognize that the full suite of securities laws can be burdensome, may create undue barriers for early stage companies who are seeking equity investment in their business. But cognizant of the risks as well, we also propose to introduce various safeguards to ensure that investors are protected. So, for example, to ensure that investors fully understand the potential risks and benefits of a particular investment opportunity, and to ensure that the retail investors, one of the big drivers for this project is the democratization, I suppose, of equity investment. But to ensure that retail investors who may not be particularly experienced in this don't have inappropriate exposure, I suppose, to the risks of equity crowdfunding. And then, as Dr. Leslie just touched on, we also plan to introduce a regulatory sandbox to allow prospective platforms to test their portal with real consumers in the live market, and I can talk about that later if that would be helpful. So these draft rules, and I'll keep trying to emphasize this point because, and this is something I think want feedback on. They've sought to be proportionate. We're looking to create an environment that is attractive to early stage companies, and also to firms looking to establish themselves as a crowdfunding portal. So I think I'd quite like you to just keep that in mind as we go through some of the specifics, and if there are things around any barriers we're putting in place or things that look too onerous, that's sort of feedback I think we'll be particularly interested in. Winston, if you wouldn't mind going to slide 19, please. So what I've done, I've sort of broken this down into the three main actors in this ecosystem and talk a little bit about how the draft rules may impact each one. So start here with the crowdfunding platforms themselves. So these are the companies that we hope will be interested in entering the market to intermediate and facilitate crowdfunding transactions via an online portal that they will develop. So the first thing to say is they will need to be authorized by the ECSRC. We expect certain standards at the time of authorization. So as I alluded to before, certain policies and procedures around ensuring conflicts of interest are mitigated, ensuring fraud is mitigated, ensuring that these firms have sufficient financial and human resources to operate. And in terms of financial resources, the draft rules propose that these firms must have and maintain at all times a minimum of 67,500 East Caribbean dollars in paid up capital. We feel that's proportionate, but again, be really interested to get your views in terms of the prudential requirements we're proposing. Because these are online portals, we would expect these firms to have robust cybersecurity policies and measures in place, record keeping arrangements, in order to conduct daily operations and also in any emergencies that may occur. And as you'd expect, we'd also expect these intermediaries to fully comply with anti-money laundering requirements. The other thing I'd say is, although we would anticipate there may be some entirely new market entrants who are looking to become a crowdfunding platform, which would be great, we also have provision for existing investment advisors and broker-dealers to be permitted to undertake this activity as well as their existing financial services activity. So they're permitted to do so as long as they make the scope and nature of the different services clear to potential investors and the public at large. And so we're looking to make this process as easy as we can. We're looking to develop bespoke application forms for prospective platforms to apply to become a crowdfunding intermediary. And then, so once authorized, we expect the platform will enable issuers to register with the intermediary to promote their business, and as Winsome says, to launch a campaign on their website. So to give an issuer the ability to or the opportunity to tell a compelling story about their business and detail the specific investment opportunity to potential investors, be they members of the public or investment professionals. And this is likely to include a pitch deck and other sort of promotional material that the issuer has produced. We also expect platforms to have in place online community discussions, so allowing actual and prospective investors to interact with each other, and as well as the business looking to raise capital. We don't want the crowdfunding intermediary to participate in these discussions themselves, but they should permit full public access to these discussions to ensure transparency and you know, good practice around the disclosures. The rules seek to ensure that crowdfunding intermediaries display the various investment opportunities from the various issuers in an unbiased and objective way, so allowing the prospective investor to filter or sort the various opportunities that they may be interested in investing. I think this is an important point, that we're not anticipating crowdfunding portals to offer investment advice or to in any way sort of highlight particular offerings in a way that could be considered investment advice, but instead put the onus on the prospective investor to filter and select the most appropriate investment that may be most suitable for them. And we'd also imagine that we'd put in place certain obligations around disclosures and risk warnings. So we propose developing standard risk warnings and disclosures, making sure that investors are aware of the nature of equity crowdfunding and some of the key risks of investing in it, some of which Dr. Leslie has articulated earlier. And certain information will be required in relation to each specific investment opportunity. So for example, financial statements from the issuer, the current valuation of their business and its current levels of borrowing, information about how much funding is being sought, how the funds will be used, sort of key bits of information to help investors make an informed decision about each offer. And we'd also expect the intermediary to conduct a certain amount of due diligence on each potential issuer. For example, conducting background checks to verify the business proposition of the issuer, to potentially conduct an assessment of credit worthiness. I think I'd be really interested in feedback on this point. I mean, there are a lot of jurisdictions around the world that put significant obligations on the intermediary to act as a gatekeeper and to sort of vet firms that come on. And I think it's important that there's a degree of that, but I'd be really interested to understand from this group and for other consultation sessions we're having about how far that may be a barrier and how far we should go with that. just very quickly, in terms of the promotion, so we envisage allowing intermediaries to advertise themselves to prevent potential investors, that it's offering crowdfunding opportunities, but we don't envisage that the platforms can advertise specific opportunities on to members of the public. So they can hold out that they're hosting crowdfunding offers, but not specific offers. Again, I think that helps mitigate the risk that it'd be seen to be offering investment advice. And we also would typically expect intermediaries to be remunerated through charging fees, commissions to the issuer. There's no real stipulations around how they do this, provided that they're clearly disclosed on the portal and to potential investors, so they understand the fees and commission structures that the portal's getting. And finally, we would hope that some intermediaries will want to test their proposition in a regulatory sandbox. We recognise this is a new activity. These rules are new, and I think it would be a great opportunity to encourage participation from potential interested parties in becoming a crowdfunding portal. And I think it'll also help the Commission and other stakeholders learn about how the rules operate in practice. Are they working as intended? And to really take a close look at whether, you know, the policy framework that we will put in place is working the way it was intended to. Winsome, I wouldn't mind if you go to slide 20, please. Very, very briefly. So in terms of key issues for investors, so we're looking to ensure that every type of investor is able to invest in an equity crowdfunding offer, and that the regulatory framework we're looking to put in place provides confidence in this activity and a degree of legitimacy. But in order to provide an appropriate degree of protection, we're looking to do certain things. So we're looking for investors to attest or to otherwise sign a standardized questionnaire before investing, confirming that they understand the risks of crowdfunding investing. And we also, importantly, propose to introduce investment limits on retail investors based on their income or net worth to ensure they're not exposed to undue risk. We're proposing that for investors with maybe more modest annual incomes of up to 100,000 Eastern Caribbean dollars, they may purchase securities up to a maximum value of 5% of their total annual income. For those with a greater annual income, they may purchase up to 10% of their total annual income. I can talk a little bit more about these if it's helpful, but I think common in jurisdictions around the world is one of the main ways of protecting retail investors from some of the risks is to cap the amount of exposure that they have. So I'd be very interested in views on that approach. We also have provision in the rules that if the intermediary assesses or chooses to assess that the investor is, how do I put this, particularly sophisticated or has a particularly advanced knowledge of finance and investment to show that they're fully able to assess the merits and risks of a protective investment, then the investment limits can be de-applied. It's an optional thing if the platform wants to develop a facility to be able to do this, and the obligation for making the assessment would be on the platform. But if it chose to, and it determined that an investor was fully cognizant of the risks and the benefits, then those investment limits could be disapplied. For accredited investors, so for example, high net worth individuals, corporations, public authorities, we don't propose any investment limits on the total amount that they can invest in equity crowdfunding. Those limits are more for sort of ordinary retail investors. And as I mentioned earlier, the rules propose to introduce certain general standardized risk warnings about the nature of equity crowdfunding to be displayed prominently on the crowdfunding portal. And we're looking as far as possible to standardize key investor disclosures before an investment is made. So for example, requiring the same information for each investment opportunity to be contained in an offering document that must be provided by the issuer to the investor, requiring the disclosure of certain key information about the business and its offering. And finally, I suppose in terms of investor protection, the rules introduce a cooling off period where the investor can cancel an investor commitment for any reason up to 48 hours after the commitment has been confirmed. And if you could move on to the final slide, please, Winston. Thank you. And just briefly then, some of the key issues for entrepreneurs or the issuers, the businesses who are looking to raise capital on these platforms. The rules expect that entrepreneurs will make key information about their business available to the intermediary in order for them to conduct this due diligence I referred to earlier. So including things like the nature of their business, any financial reports, business plans, particular risk factors, and the mechanics around how the equity investment will work. So for example, the procedure to return investor funds if the target offering is not met. We also propose that there'll be a limit to the amount of capital that a issuer can raise via equity crowdfunding. So in order for us to disapply the detailed prospectus and registration requirements under the Securities Act, we're proposing that the total amount of securities being offered by each individual issuer should not exceed 5 million East Caribbean dollars within a 12-month period. Again, be very useful to hear feedback in terms of that. And that this offering document is prepared and it contains all the key information about the firm, about its financials, about the risks, the specific risks factors it may have, to be provided to the investor before the investor is able to make that investment. So I'm conscious of time. I've spoken for far too long. I apologize, but I guess to sum up, we've tried to design a proportionate framework, one that seeks to promote this activity in a prudent way, and really interested, I think, to hear your feedback. I appreciate I've gone into quite a lot of detail about the rules, and I think for this audience, and given the eminence of many people in this audience, I think it would also be useful to take a step back and to maybe think about what would success look like for you. Are there things from your perspective that this project absolutely needs to get right? And conversely, is there anything missing? Any challenges, any red flags of things that Dr. Leslie and myself have spoke about that we need to be aware of? So with that, I'll hand back to the group, and I'm really looking forward to your comments and feedback.
Thank you. Thanks, Tom and Winsome, for your very succinct but yet comprehensive presentations. So far, we have one question, and before we go to questions, I just want to let persons know that you can, if you have a question, please indicate by using the raise hand feature on the in Zoom as well. You can also place your questions in the chat. And we do have one question, and I think this one might be for Dr. Leslie. How do you envisage getting around the feeling the MSME will have based on the level of scrutiny or disclosure required for participation? Or Tom, anyone?
First of all, well, perhaps we both can answer, because I think that looking for equity financing is really a mindset. First of all, you have to be, obviously it has advantages, but you have to be prepared to give up a piece of your company to that investor, right? Whether it's crowdfunding or it's conventional angel investing or venture capital, it's the same principle. But I would argue that if you're going for a commercial bank loan, you have to prepare a package which involves a lot of scrutiny about your business. So I don't see the level of scrutiny here any different. And in fact, I would venture to say that perhaps both the investor and the entrepreneur would have, based on the rules we're developing, have protections, right? Which don't guarantee, but help or a hedge against, you know, the negative aspects of things that could unfold. So I think it necessitates, as a business person, it necessitates a lot of thinking around the future of your company, where you want to take it, and what you're willing to give up and disclose in exchange for scaling your company. Tom, I hand over to you.
I think you took the words out of my mouth. I mean, I think, you know, I think it's, we need to be proportionate. We also, I think, a related point to this, as well as the scrutiny that the SME might feel, there's also the level of obligation we're putting on the intermediary to make these judgments about the credit worthiness or the viability of a particular business in order to allow them to go onto that onto their platform. You know, I think that's a difficult balance to strike, actually. As I said, a lot of the really successful crowdfunding regulatory frameworks across the world do put a lot of emphasis on the intermediary to do a significant amount of due diligence on the platforms before on the entrepreneurs before they allow them to pitch for investment. I mean, I would say that the obligations that we're suggesting in the draft rules, in terms of what the intermediary will require from the entrepreneur, are not unduly burdensome. They're sensible things, I think, that would give everybody in the ecosystem sort of confidence that these are viable businesses looking to do the right thing. You know, it's not a high level of scrutiny, I would say. What I would say, the other thing is that whatever level of due diligence, and it is that the obligation is quite high level, it's not very prescriptive, but whatever level of due diligence the intermediary does, that needs to be disclosed to investors as well, so they understand the level of due diligence that's been undertaken. But I think the onus is very much on the platform to make a judgment about what is appropriate and what they're comfortable with.
Thank you. Thanks, Tom and Dr. Leslie. We have a question from Garfield Joseph. Garfield, you can go ahead, please.
Yes, thank you, moderator. Thank you for the initiative. I have a couple of questions. Are we thinking of having a certain number of facilitators within the OECS region, maybe 1 or 2 per country? Or what is our vision in terms of how many facilitators we think we will need to be able to facilitate this crowdfunding mechanism that we're trying to put into place? I'd just like to hear your views on that. My second question is, I understand the paradox of the regulation. I read through the document. It's a lot of legalese there. And I'm beginning to think, how do we make the process watertight, but at the same time, not so onerous in terms of being able to participate? Because I'm thinking back that one of the reasons why we are basically launching this platform is to be able to increase accessibility to funding. And at the same time, I'm also thinking that we have traditional players within the financial market. Are we thinking of providing a framework that will allow for non-traditional financial institutions to participate, which I think ought to be a part of the objective, but at the same time, how do we make it not so onerous in terms of costs and resources, right? Because you look at a lot of the legislation, you don't have costings, but it could be a significant startup cost for someone outside of this arena to be able to participate. And I think if we're able to strike a balance between having new players within the industry, but at the same time, having the capability and the resources to meet the regulatory requirement, I think that will be a win-win. So I'd like to hear your thoughts on those things, but I like what I see here. And those are the only considerations I have at this point in time.
Thank you very much, Garfield. And I will invite either Dr. Leslie or Tom to come in, or perhaps Tom and then Dr. Leslie can weigh in afterwards.
Yeah, thank you. Thank you very much for the questions. Two very good questions. I mean, in terms of the number of platforms I envisage, I probably would defer to my colleagues in the region with a probably greater understanding of the sort of the market participants than probably I have. I would just say though that around the world, you know, no matter the size of the jurisdiction, there's often not a huge amount of platforms that have been established. I mean, I'm in the UK at the moment. I could name 3 or 4 equity crowdfunding platforms in the UK, no more than that. So you know, I think the number of platforms, I think it'd be really interesting to see how much demand there is in the market, and it'll be really interesting to talk to some of the prospective intermediaries later on in the week to understand their, you know, what their incentives or any barriers that we're potentially creating. But generally, there's not many, and generally they coalesce around 2 or 3 major players that have a lot of traction in the market. It's not a very disparate or markets typically I've seen. I don't know, Dr. Leslie, if you want to say any more on that point.
No, I agree with you, Tom. I think that I'm just looking up at the rest of the region to see crowdfunding is a relatively new concept for the region itself. I can only think of 2 countries now where there's some crowdfunding activity. There is one in the Bahamas, Arawak X, which has just started. They have, in fact, I think they just did their first close on a campaign, and they're looking to do another. And there is a major one in Jamaica, the Jamaica Social Exchange, which starts off, it's a 2-part platform, if you will. The first piece of it focuses on donations. The second piece focuses on impact investing. And the idea is to move the institutions that are posting on the donation side into investment, and then ultimately, ideally, into the junior market. So they're seeing it as sort of a growth opportunity for firms to get to the junior market using several steps. But having said that, there are 2 smaller ones in Jamaica that just started around donations primarily. So just to say that I'm not foreseeing more than 1 or 2 platforms being created in the ECCU, simply because 1, it's a small market, 2, the number of firms that could be ready going out the gate, meaning the first movers on a platform, would be relatively small. And so certainly in the short to medium term, I'm not seeing more than 1 platform.
Thank you, thanks. And the second question from from Garfield Joseph is with regard to the rules about them not being so onerous. He did mention that in his review, he thought that there was a lot of legalese in the rules, and whether, you know, we can strike that balance of having rules that are not so onerous, but yet still, you know, providing the kind of protections that the market would need, so that we maintain that level of confidence in the investing public.
Yeah, I think there's 2 points there for me. I think there's one point around how the rules are written, you know, and can we make them easier to understand, you know, and give that sort of regulatory clarity, because I think regulatory clarity is so important. And if, you know, you can't understand what the requirements are, or that is a real blocker to participation. I think it's a really, really good point. So, you know, maybe this is something we probably need to think about, but in terms of, could we simplify and clarify some of those, you know, some of those rules? I think we probably could. Could we produce accompanying documentation, accompanying guidance to sort of step firms through those rules? I think that might be a good idea too. So yeah, absolutely take that point. But I think your other point is around how onerous the actual obligations are. So even if you understand the rules and you're clear about them, how are they unduly onerous? I think we've tried to strike that balance. I think a lot of the obligations are around disclosure and disclosing key things about your business, disclosing key things about the nature of equity crowdfunding, and also putting in place caps and limits around the amount of investment that you can, so the amount of capital that you can raise and how much you can invest. I mean, from my perspective, I've been really conscious that these have not been too onerous, but if there are specific things there that you think are probably a bit too burdensome, be really interested to hear what they are and take that feedback.
And as a second part to his question, he was asking whether the non-traditional financial institutions could participate as well.
So I think the short answer is yes, and I think that's part of what we're trying to do. So I think in terms of, if you want to be a crowdfunding portal, I would say it's absolutely open to non-traditional financial services firms, and it'd be really interesting to see actually the types of firms that we get. Technology companies, companies that are really good at building sort of community engagement models that probably aren't necessarily financed, but they want to branch out into it. I think there could be some really interesting solutions, hopefully around that.
Yeah.
Right. Dr. Leslie?
Yeah, if I might just add something from the entrepreneurship business owner side. I think this just, Garfield, this is important to realize that this is, one, this is a pilot, but two, we're at the first step of what we see is a longer term process. So running in alongside the development of the platform and all of this, we have to organize a training and a capacity building program. And Tom touched a little bit on this, saying that there will have to be sort of training education sessions around understanding the rules on all sides, but I'm thinking now particularly on the entrepreneurship side. Also, entrepreneurs are going to have to be prepared to list on the platform, so they'll have to understand why the rules are there, how they protect them, and why they need to be very judicious in terms of what of reporting and other kinds of things. So a second phase of this, if you will be a fairly robust training and awareness raising program around educating and making sure that small businesses are ready to actually engage in this kind of activity. But I think the rules have to have a certain amount of rigor, because as you know, there's a trust element running through, I would say, the Caribbean in general around financing and access to finance. And so you have to make sure that you're credible going out the gate. This is why the ECSRC is putting its stamp of approval on this initiative, just the same way that the Jamaica Stock Exchange has put its stamp of approval on the social exchange. And in fact, the rules around transparency and so on that are in the junior market in Jamaica are being applied to the social exchange. So we're trying to mimic a similar arrangement here, where the same amount of rigor that the ECSRC approaches their work more broadly is being applied here in this case, to give the public confidence that this is a bona fide, legitimate, upstanding, if you will, venture.
Thank you. Thank you. Before we go, we have some questions in the chat, but before we go to the chat, Garfield has a quick follow-up.
I will yield.
Go ahead.
I will yield to other persons and I'll ask that question at the end. No problem.
Okay, great. Thank you. So going to the chat, we have a question. Does the platform or the app allow for the entrepreneur to track his financial information? Tom?
So I think that would be, I think the rules are silent on that. I think that'll be up to the individual platform developer to work out from their business proposition what functionality would be most attractive to have in place for a particular issuer to be attracted to that portal. I think that's up to the market to determine those sort of things. Unless anybody disagrees. Dr. Leslie?
No. I think it's up to the platform to do that. I mean, I think it's a cool idea.
Yeah, it is.
Certainly you will be able to track, obviously, how much money you're raising or how much is being committed to your campaign. But a side benefit would be if you could do that, because as you know, there's a huge data problem in the Caribbean around financing and financial statements and so on. So if that's possible on the platform, I would think that would be a bonus for companies to want to list there.
Thank you. Dr. Leslie, since you're on the floor, I think this one is for you. How would the deals that come to market be selected, and how and by whom will they be marketed?
Well, I think that the deals, the platforms, again, will have certain rules around what deals qualify, I'm putting it in quotes, to be listed. There are certain rules of the game around that. And again, the platforms will have to decide on how best to do that. And there are, of course, best practices that Tom could refer to, and there are in other platforms, how those things are treated. And in terms of the marketing of the deals, I alluded to this earlier. Obviously, you're on the platform so everyone can see it, but it's also incumbent on the companies themselves to market their individual campaign. And it certainly helps if they're coming into the campaign with folks who are already committed to provide funding, so that those can go, say you can launch a campaign and within a day or two, you have 5, 6, individuals who are ready, who might have indicated prior to this that they would support you. And then they're putting this on the campaign. This would spur, obviously, more interest in that individual issuer's campaign.
Yeah, I think the marketing point is interesting, and I think I was wrestling with this quite a lot in terms of what we'd allow the intermediary themselves to do versus what the entrepreneur could actually do. I don't think we want to be too or at all prescriptive about how an entrepreneur chooses to market an investment opportunity they may have. I think we need to be a bit careful, which we've tried to be in the rules around the platform doing that marketing exercise for the entrepreneur, right, which we want to avoid.
Exactly.
Yeah.
So I think it's up to the entrepreneur themselves to actually market that, because the platform is neutral, or it should be neutral. Here are the offerings for 10, 12 companies, but each of those 10 or 12 companies need to also realize you can't just post your thing and leave it. You have to actually actively market to say you're there. So it helps if you have, a crowd of believers already, or a following already. You market to them first, and then by extension, they market to their friends and so on.
Thank you. Thank you. We have, let's take 2 questions from the chat, and then we'll go to Mr. Adams, who has his hand up. The proposed rules indicate that financial institutions and financial service providers are prohibited. Should that be qualified? Tom?
So yeah, I mean, it's a good point. So the rules do stipulate that financial institutions and financial service providers are prohibited from raising funds via crowdfunding. So they're able to become a portal, but they're not able to be the issue capital via a crowdfunding platform, which I think is sensible. But if there's something I'm missing, please do follow up your question, and I'll come back to you.
And the second one is, what is the ECSRC's definition of an MSME in terms of capital and revenue ranges? Dr. Leslie or Tom?
I knew you were going to come to me. Okay, all right. So there is no universal definition of MSME across the ECCU or across the Caribbean, really. So but generally speaking, a micro business is a business with less than 5 employees and up to, say, 150,000 EC dollars. That's micro. Small, generally speaking, again, is up to 25 employees, say 5 to 25. In some countries, I think it's up to 50 employees. And annual revenue or annual turnover of between 151,000, let's say, EC dollars up to as high as, in one case in the ECCU, 2 million. So you see, you have a wide, broad band of companies that could be possibly included in this small category. I would say that this equity crowdfunding project is geared specifically at the small category.
Yeah.
You, Tommy, wanted to add something?
Well, I was just going to say, I think it's a really interesting point, actually, because we've highlighted certain criteria of entities that will be prohibited from raising funds on via equity crowdfunding. And one of those categories is listed companies, which I think is entirely sensible because this is for the stage before you become listed. But right. Apart from that, we haven't set a sort of a limit in terms of, well, if you're above a certain size or you have a certain amount of turnover, then therefore you can't raise funds via equity crowdfunding. As long as you keep within that $5 million annual capital limit, then it's potentially open to firms that you may not categorize as MSME, which is an interesting point.
But I think it's for me, from where I sit, I think it's important that the rules don't specify that.
I agree.
Because just I'm going to backpedal a little bit from what I just said. Obviously, the sweet spot for this would be the companies in the small category. However, one of the attractions for equity crowdfunding is that startups or companies that have a what they call a minimum viable product, you have a prototype already, and there's clear evidence that you can scale quickly. I'm talking technology, for example, would be in some instances ideal for this. My only question or doubt, perhaps, is the fact that the ordinary investor might be risk averse to the point where they're saying, wait a minute, I need to invest in a company that already has financials, already has customers, but who wants to scale beyond where they are, rather than saying, okay, I'm going to take bets on a IT company coming out the gate that has a good software product, but how do I know that their projections are going to actually happen? So maybe I will take a safer bet on a more established company. So I'm not saying if you're an IT company or tech company with a good product that you shouldn't list. I'm just saying, based on the risk profile that I know of the average folks in the Caribbean who have savings and who might want to put them in this medium instead, they might want to go more towards an established company, if that makes sense.
Okay, so I see 3 hands. We'll go with Mr. Adams first, Roy one, and then Garfield and Sheena.
Hi, good morning. Yes, good morning to the panelists and to all participants. Are you hearing me?
Yes.
We can.
Okay, excellent. I know we've been, and forgive me, I haven't had sight of the rules, so I really can't say for sure whether this has been addressed in the rules. But I just wanted to throw it out for conversation. We talk a lot about finance as if potentially the only way of exchanging equity is for actual finance. What about the exchange of technical resources? So in the case of a fintech company that is in its infancy stage, but really and truly to come to market, they want to acquire the technical expertise necessary to provide the company with that launching pad. Is that something that the platform recognizes, and how would, and is the rule reflecting guidance on that? Just thought I'll put that out there.
The platform is basically for finance, not for, I mean, you raise a very interesting point, because I don't think there is a mechanism in the region, certainly not in the ECCU, for this kind of exchange of technical expertise. But the platform itself is focusing on financing, even though in, what should I say, in conventional angel investing, companies, because equity financing is known as smart capital, the conventional equity financing is known as smart capital, which means it comes not only in financing, but also with, you know, access to networks, access to technical expertise, contacts, etc. Equity crowdfunding, because it's a simpler, in quotes, option and a more a democratization of both investment on the investment side and also financing from the entrepreneurship side. It doesn't include that expertise aspect in a deliberate way. It could be a byproduct, perhaps, of this, but there's no direct structure within an equity crowdfunding platform or in the ecosystem itself for that kind of technology transfer.
All right, thank you.
But I think you raise a very important point. This is something we should contemplate more broadly, not just for tech firms, but across the board, some kind of mechanism for firms to get access to technical expertise. I know in Jamaica, for example, the Development Bank of Jamaica has a huge program now. It's a grant program assisting firms at all stages of development, from seed stage to growth stage. There is a grant fund component that is financing technology transfer. And so perhaps, I'm not sure if there's an equivalent. There might be something in the Eastern Caribbean around digitalization, but I'm not sure if there is a mainstream program. If not, there should be one, because it would certainly help this program and others like it, with not only the capacity building piece, but the actual transfer of experience and expertise in various areas.
Right. And Dr. Leslie, just to add, I was wondering if that is something that could also be included as part of a second phase, perhaps, if we do go to a second phase of this particular project. So all of these ideas are excellent.
No, that's exactly spot on. I think it would be very helpful as well.
Thank you. Garfield, Joseph? Before Garfield comes in, Mr. Adams, is that okay with you? I know that your mic is still open.
Yeah, it is. You know, I'm happy to hear the feedback there from your colleague, and I think she captured it well, in the sense that, you know, with the advent of technology and the impact it is having on all businesses throughout, it is almost it's almost impossible these days to bring a startup to life if you're not considering technology as part of your strategy or digitization.
Yeah.
And most small businesses, really, entrepreneurs, are probably not that fortunate to be digitally savvy or technically strong. And so you may very well find that could be one of the most critical element of assistance needed in order to bring whatever vision they have to life. And I'm actually speaking from a position of experience, and deep down into a project right now, and I can feel like that is a type of support that is necessary. But
let me just say, I'm thinking aloud now, because I know that the OECS is implementing a project funded by the Inter-American Development Bank's Compete Caribbean program. It's an innovation, it's to foster innovation in small business. And I believe there is a technology aspect, but again, it's more technology adoption around digitalization. So this might be something that we could talk to them about, to see whether companies, for example, who are in that program would be interested in crowdfunding as sort of a financing option for them. So there might be synergies between those two programs. So, but thanks so much for that question, because it's gotten us thinking now about another angle to this. So thank you so much.
And I'm glad you raised that program as well, because there seems to be so many programs run in parallel within the OECS space, focusing on small business development and small business finance, and all with their own interests and different type of approach. I know that the Eastern Caribbean Central Bank have their ECPCGC type program where it is geared towards debt financing. But again, you know, I think one of the colleagues on the call raised it earlier. It is not always as simple as they appear, even in their marketing. Access in itself is still very much restrictive and onerous. And I think he's quite right when we talk about trying to make these things less complicated as possible. And it takes me to the other question is there any type of resources available from the ECSRC or through the conceptualization of this platform to assist entrepreneurs in putting together the type of marketing campaign presentation necessary to be on the platform, since the platform clearly will not be given that sort of inclination to market on behalf of entrepreneur. For me, that is where potentially you can see a lack of participants come in. And that could be costly as well too, because I think he also alluded to the costs associated with coming to market.
All right. Dr. Leslie, just before you respond, I just wanted to say that, you know, with all the other projects that are going on, the ECSRC is seeking to work with the ECCB, the ECPCGC, the Eastern Caribbean Partial Credit Guarantee Scheme. There's a representative who's on the program here with us today, as well as the OECS. So we're looking at ways of, you know, creating synergies through these various types of projects so that we're all working towards one goal at the end of the day. So Dr. Leslie.
Thanks, Alusha, for saying that, because I think the first step here in this pilot is also to sort of look at the panorama and see what other products are out there and see how we can leverage this money that's coming from the CDB most effectively to make sure this works. But again, this is a first step, because there's a whole, as you mentioned, Mr. Adams, the whole issue of being able to qualify to be on the platform is very important. And of course, I mentioned in my presentation, it can be costly depending on how things are structured. So there is going to have to be some arrangement made, perhaps in a second phase, where there are discounted fees or something. You know, a project provides or negotiates with providers to assist firms at a discount based on volume, perhaps, to make sure that the firms who are bona fide firms who have good ideas and who are perfect candidates for this can actually prepare and mount a successful issue on the platform. So we're definitely thinking about how best to do that.
Okay. Does that answer your question, Mr. Adams?
Yeah, so certainly.
Okay,
I mean,
great. Thank you. Thank you for your questions. We'll move to Garfield Joseph and then Sheena Regis.
Yeah, thank you once again. As I've been reflecting even more, because I'm actually in a lending institution, and I'm thinking that perhaps the majority of persons who would welcome this initiative are those persons who may not be able to access traditional financing, right? So when you really think it through, persons with collateral and security and know-how and capabilities, they can always go to the traditional financial institution. And I'm thinking the concept of crowdfunding started not really in business, but other projects, pet projects of persons, and they're able to spread the risk by getting a number of persons. And so I'm beginning to wonder if perhaps we may consider, the opportunity to leverage across the OECS, because my initial question was, how many of these regulators are we looking for, right? One in each country, I don't know what that number is. But on reflection, it may make sense, because part of the reason we go for crowdfunding is because we believe in the idea, and we also want to spread the risk and also, you know, provide opportunities for ownership for others. And if it were possible, and perhaps it may require a proactive approach to identify one or two projects that we could vet to think that it's, you know, everything is risk inclusive, but you could say, we believe in these 2 or 3 ideas. we have a framework that we can go public, as in the case so where you mentioned that there's a particular case in Jamaica. And then we leverage that through the OECS, get our learnings from there, and then we can launch so that we can get traction. I'm beginning to think, as I reflect upon it really hard, that the best way to get the support of the entrepreneurial class, which is what we're really after, the non-traditional entrepreneurs who cannot access traditional financing, is to have a really strong case of a good practice, best practice. It could be within the OECS or extra-regional, and then we can showcase that, and then we can, I believe, get greater traction. My final comment would be, it's about the cost structure as well, because if the cost of capital costs for initializing this project, and then the fees that are associated to the end user, then it could be a challenge. So those, I think, are the barriers we need to think about. But I am a big believer that this is the way to go. I see it as a really big opportunity. And to the degree that we can leverage small economies of scale, 1 or 2 projects, 1 or 2 sectors, and we do it right, I think it makes it a lot easier for all of us.
I think that's a good idea to stoke the fires. Not sure exactly how to operationalize that, but I think conceptually it's a good idea. I do buy into the fact that you're going to have to, at least initially, support for companies to list. However, I think we have to get away a little bit from companies expecting that everything is going to be given to them in a grant, because otherwise you don't get companies moving along the growth path and being able to access different kinds of funds. I think certainly at the early stages, you need to protect companies and assist them. But I think at some point, companies have to basically walk the walk and be prepared to take on, whether it's a loan or in this case, equity, in order to grow. So I think it's a very delicate balance, because you don't want to, companies have to have skin in the game. So sure, you could say conceptually provide grants to assist companies to prepare their campaigns to list and so on, and maybe to contribute in some way to underwriting some of the fees. But I think at a certain point, companies have to stand on their own. And so we'll have to figure out, as we think through this process, how best to get that first cadre of firms on the platform, and what it's going to take to do that. But again, we have to get away in the Caribbean from constantly relying on grants, because if you do, you never grow beyond a certain point. Just saying.
And
I
Tom,
think
you wanted to come in?
Yeah, sorry, thank you. Yeah, I agree entirely. I was just going to say that I think the onus is on the Commission to ensure that it's not introducing any inappropriate regulatory burdens that's going to raise those costs for entrepreneurs. I think that's what within the Commission's gift. I think going further than that, I think might be, it's difficult for me anyway, conceptually, to think what more we could do. Yeah. But I'd also say, I think it's a great point about examples of best practice. And I think the regulatory sandbox could really help with this. So I've got plenty of examples when I was running the sandbox in the UK where we'd sort of showcase these firms that we'd supported, do case studies, and that created a real bandwagon effect in the UK about, well, I've seen this firm being supported to do whatever it was, a blockchain, equity issuances on a blockchain, or whatever the example might be. And then once the regulator puts something out saying, right, this is how a firm can undertake this activity, this is the support it can get, we saw a host of other firms coming to talk to us saying, right, we want to get into the market. We're really interested in how, regulation can apply to my business model. So I think the sandbox, if it's done in the right way, could really showcase some of these sort of first movers and sort of shine a light on these type of firms. So I think that's a really, really good point. And I think I totally agree. It's a really important way of creating that, need to create like a bandwagon effect.
Mm-hmm. Yeah, I think Tom is actually right. I just wanted to clarify one thing. Tom's point is spot on about the limits of the ECSRC in terms of what it can do in this scenario. But I think certainly in terms of the partnerships with other stakeholders in the ecosystem who do capacity building and so on, this is where my point about grant funding versus companies standing on their own comes in. And certainly the whole idea about technology transfer and these kinds of supportive mechanisms to basically create that cadre of firms who can be robust enough to list comes in. So let's not be clear that there are limits to what ECSRC can do here. They can set the table, but others have to come to the table with different parts, with different dishes, if you will, for this project, right?
Yes, yes, thank you. Yes, indeed, Dr. Leslie. So we are creating the facilitative environment, and then, other persons will that's where the contributions from these other organizations would come into the picture as well. Sheena, you have had your hand up for quite some time. Thanks for your patience. Sheena, if you're speaking, we are not hearing you. I think
Hi.
Hi, okay, go ahead, please.
Okay, great. Thank you so much, Ms. Hazel. Yes, so my question is to Tom. I would have mentioned in the chat box that there is the prohibition on financial institutions and financial services company, to which Tom would have, I guess, stated why that was so. But earlier in the conversation, it was mentioned that non-traditional financial services providers, etc., might be a good idea for the platform. So I think in terms of the wording of the rules, probably it needs to be, I don't know, modified a bit to not exclude everyone, because how I read it, the statement kind of excludes all financial institutions or financial services companies.
Thank you, and thank you for raising that, because I think you raise a point, I think, about the legibility of the rules sometimes as well. I think so. I think there are two distinct things here. I think there's who we're permitting to raise or to seek capital via crowdfunding, which would prohibit financial institutions from doing that, but they wouldn't be. They would be permitted from launching a crowdfunding portal themselves. They just wouldn't be, we're calling them entrepreneurs or issuers, they just wouldn't be able to seek capital via a portal.
Okay,
Does that-
understood.
Okay, thank you. We have some questions in the chat. I will go to one of them. Sorry.
Ms. Faisal, sorry, just
Yes.
one more question. Read a definition for a MSME, right? Is the crowdfunding platform for MSMEs?
Yes, it is.
Right. So if that is the case, I think the ECSRC should have a definition of what is a MSME, one. And I think in the case where larger institutions, well, that are bigger than MSME, want to raise capital, to me, that should be the avenue to push them into the capital markets. So that's why I feel like there should be a limitation, or well, a max in terms of, size of capital or revenue to be listed on the platform.
Interesting.
A question though, why you're saying companies that are large companies outside the MSME framework, they would qualify for conventional equity financing or venture capital? Because on a crowdfunding platform, you're raising small amounts of money, $1,000, $2,500, etc. So
Isn't the max
I'm not
5
sure whether
million?
I'm sorry?
Is it at 5 million is the max?
for,
In terms of
In total,
fundraising?
total.
yeah, but that's
total value.
total. That's total
Oh,
from
it's total since you
from the
list. I thought
world.
was
yeah.
for a year. Okay.
Yeah, yes, per year, but you can't raise in total per year more than 5 million.
Okay, so every year as a large company, I could come raise 5 million.
In theory, but I'm saying if you're a large company with financials, customers, etc., you might want to raise, you could even be on the stock exchange. Why would you necessarily want to do crowdfunding? Crowdfunding, the sweet spot for crowdfunding is really smaller companies who are in who are scaling, not, you know, established companies like a Grace Kennedy, for example, or you know, a Massey Group. They wouldn't want to raise money on this platform.
Right. And I think so that's, I guess, leaning towards, you know, saying that we need to define
Yeah,
in terms of the size of what types of businesses.
Right.
I'm not sure what you feel about that, Dr. Leslie.
but you have to be careful though.
Mhm.
That you have to be careful with that. I'm thinking companies will self-select themselves. You know, I mean, in one of the courses I teach, I show the different kinds of financing that are available and accessible to companies at different stages, from seed all the way to growth stage. And I'm saying once you're established, once you're scaled and you're at a certain size, that's when venture capitalists, you know, conventional commercial banks, you know, want to give you money. And you're very attractive to them. Things like, you know, factoring, mezzanine financing, etc., are attractive for those kinds of companies because they already have a track record. They have a relation with a bank. They don't need to put a campaign together to raise small amounts of money from the crowd because they have other options. They have credit lines. They have, I mean, in theory they could, but I don't know if it would be an attractive option for them. So I just think we have to be careful. I think if you leave it open, then you're not accused of excluding anyone. But once you start defining, then you could, oh, why aren't you including this segment of companies? Why are you including this segment? So it's something to discuss, I think, but I'm not sure if that's what we want to do. But certainly we can discuss it. Because again, there's no uniform definition of MSME across the region. So this would mean that ECSRC would have to come up with its own definition that all the ECCU countries would agree to for purposes of this platform.
Tom, any thoughts?
No, just thinking, because it's such an interesting question and something I hadn't thought of. And so, no, I'm just thinking really. I'm just
looking at the, you know, the implication. It's a great question, a great suggestion, but I'm just thinking of the implications, having done a lot of work in the region and knowing and being, you know, caught between, you know, many different definitions of MSME. I'm just saying it might pose a challenge unless the ECSRC decides on a definition itself.
Yeah, I agree. I'm against regulators making definitions, I think, philosophically, because I think it's very, very difficult to do with precision. And my instinct is always to keep things open. And I guess looking around the world, I can't think, and I may be wrong, but I can't think of any regulatory framework that sort of defines like maybe I don't know what it would be like a limit of turnover for a particular company in order to define them as an MSME or not, or you know whatever measure you'd use.
Right.
The way that we've sought to do it is around the total amount of investment you can raise, and therefore that would de facto exclude presumably a lot of large companies out, but it may not necessarily do so. So I think we need to think that through, Dr. Leslie and Lucia, but I think it's a very good point.
Yeah, that's true. That's true. I'm in favor of having it open.
Okay.
And then companies self-select basically.
Right. So we need to put our heads together again
On that one.
on that one. Yes.
It's a very good point.
Yes, yes. Okay, so back to the chat. What is this one, I guess, for Tom? What is the rationale for canceling all funds if the target amount is not met?
Yeah, so the rationale for that is, and just to say, I think this is almost entirely consistent with every other crowdfunding framework across the world. There's either all or nothing. So, and Dr. Leslie might want to come in, but the rationale for that is in your pitch as an entrepreneur and in your offering document, we're going to call it an offering document, which is like your key disclosure document. You need to be really specific and clear about how you would use the funds that you will raise and that total amount of funds. I think it calls into question all the disclosures and all the pitch documents that a firm would have if it only raised half or a quarter or a tenth or whatever it may be, because as an investor, I wouldn't go into that transaction with the knowledge of what my funds were being used for, and I may agree or may disagree. But I think it's that transparency thing and being really clear that I want to raise this amount of money, and I'm going to know as an investor what you as a firm are going to propose to do with that money. Dr. Leslie, is that?
No, that's exactly right. Because, okay, you raising money for working capital to do X, Y, and Z. And you say you need $50,000, coming back to my earlier example, and you only raise 20, right? So in the mind of an investor who is committing to putting in, I don't know, let's say $500 for that money. In my mind, I'm like, okay, you only raised, say you got the 20,000 or the platform gave you the 20,000. It means, what does it mean for the goals that you set out in that offering document to achieve? You can't clearly meet those targets or those goals with less than half the funds, right? So that's a rationale for all or nothing, because then the other investors are not going to think too kindly to giving you money to achieve a goal and you can't meet it because you didn't raise all the money. So it's a credibility issue as well as, you know, the other things that Tom talked about.
Okay, thank you. And going back to the chat, good morning. Congrats to the ECSRC on this excellent initiative. I think Mr. Joseph inquired about the startup costs for the entrepreneur. Can you give some more details on the cost, please? Startup costs for the entrepreneur.
The platform, meaning the cost of mounting the campaign, the fees the platform will charge, etc. Because if that's the case, the rules don't speak to that. Correct me if I'm wrong, Tom, but the rules don't speak to that. It's
I think that's a matter between the investor and the entrepreneur and the platform.
Mm-hmm.
You know, and so all the rules will say on that, as long as it's clearly disclosed to the prospective investor, there's no further stipulations on that.
Right.
Thank you. And the next question, how successful has equity crowdfunding been in the Caribbean?
Okay, well, it's early days. I think it's too early to talk about success. I know that the social exchange has a number of listings now on the exchange. Several of them have been funded. As I said, the program in Bahamas has just started. They have 5 listings, I think, on the platform, and they've funded either 1 or 2 so far. They started last year, so again, it's early. I think, as you know, crowdfunding is fairly popular all over the world, and certainly in the US, you have GoFundMe, you have Kickstarter, you have Lendistry, you have Kiva, several others that are doing quite well. It's a new concept in the Caribbean, and I think this is a test case for us to bring it to the ECCU countries. I think what we're trying to do is to learn from the experiences to date of the platforms in both Jamaica and in the Bahamas to make sure that we are launching this, going out the gate in the right way and creating the level of interest necessary to really make this work. I think a big sort of heavy lift will be to secure the confidence of the public who will invest and the companies that will list that this is going to be a robust platform. It's going to have the required regulatory framework to support it, and that you know, it'll go well. So this is why we're looking at it as a pilot, because, you know, since it's new to the region, we want to make sure that it works. And let me say that, you know, the ECCU region is a perfect place to test this, because usually when you're doing a pilot, you're doing a small universe of beneficiaries, a small population. So in many respects, perhaps the ECCU is perhaps better placed to test this than, say, you know, a larger country.
And thanks, Dr. Leslie. Just to add as well, that there was a study done by the IADB recently, and it involved one of our member countries, St. Lucia, as well as Barbados, Jamaica, and Trinidad, where they would have done a study on crowdfunding in the Caribbean. And I believe that that study the report is available online. And it did have some very positive recommendations on how it would work. And they did find in that study that crowdfunding is something that would work in our region. So as Dr. Leslie said, we're taking the first step and actually creating this pilot to test and to offer, you know, this additional option for financing. There's one other question in the chat. Any idea how long it would take from beginning to end for the entrepreneur to get the funds? And I'm assuming that these are the funds that are raised via the platform.
My quite probably quite useless comment on this would be it would entirely depend. I think there's nothing in the framework that would say that, apart from that if once a campaign and an offering has been completed, then I think there's firms need to be transferred to the entrepreneur immediately, so they get the funds immediately. Quite how long that period is of that campaign and that the time it takes to reach their target would be something that the entrepreneur would agree with the platform. It could be days, it could be weeks, it could be months. It would depend, and I think it's entirely right that that's a matter for, you know, the entrepreneur in terms of how long they want to keep the offer open.
Sure, and I would add that in terms of the time to prepare a campaign, again, it depends on how ready you are. So it could be, you know, 2-3 weeks, it could be months, depending on what you need to prepare and where you are. If you've got your financials in order and all of those things, then it's a faster process. But if you've got to pull things together with an accountant, with a lawyer, et cetera, it could be a couple months.
Okay, thank you. I don't see any other questions in the chat, and there are no hands raised. So just to Tom, did we address all of the issues that we were looking at from our point of view in terms of getting feedback on some of those key issues that we wanted?
Yeah, I think so. And this, I mean, this has been really, really useful for me. We're also talking to some of the market participants in the next couple of days, where, you know, we may get some feedback in terms of the prudential requirements we're putting on, the sort of investor limits and things like that. But I think from this group, it's been really, really interesting. I think we've got everything we need. If there are any, obviously, if there are any additional comments in terms of the specifics of the rules, please send them over, because they'll be really, really welcome. You know, if I think you've highlighted a few areas actually where the rules could be clarified, and so that was really helpful. But if there are very specific things, would really like to hear them. But I think No, I think just thank you very much. It's been absolutely invaluable, your feedback. So thank you.
Okay, thanks. Dr. Leslie, any thoughts? We're about to close. It's 10 more minutes.
Thanks, Alusha. No, I like Tom, I'm grateful for the questions we've had. Some of the things we've never really thought through. So I think this has been very, very useful for us. Even in terms of the training that I will conduct later, these questions are very important and relevant. And certainly I'm happy to see that so many folks logged on this morning. So thank you so much.
Yes, and thank you to everyone who participated and to our consultants who very ably and skillfully fielded your questions. And we want to say thanks again to our sister institutions who represented. We have the ECSC on, and also we have the Eastern Caribbean Partial Credit Guarantee Scheme representatives on, the persons from the governments, fellow regulators I see from the list. We want to say thanks for participating and for being part of this process. We have taken your ideas, noted down your ideas, and we will be taking a second look at the rules based on your feedback, so that whatever we present and we propose and we finally implement would be something that would work very well for everyone, including the ECSRC as well as the market participants. So I don't see any more questions, and so I think we can sign off here if there are no more questions. So thanks again. Thank you, everybody.
Thank you.
Thanks, everyone.